SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Kerry, Lutz, Financial Survival Network. We are on the road talking with John Rubino. Welcome to the Currency War, Part 15, and it's time for the Europeans to carry their fair share of what is a horrible economy and deflation and inflation and everything else. John, how are you?
Great, Kerry. How are you?
All right. So what is going on with these Europeans? They see that QE has done absolutely nothing for the U.S. economy, that doing all these zero interest, no down payment, no nothing has done nothing for the housing market, that car sales are sputtering to a halt, and they're just going to do the same thing as the United States. I mean, what is with these people? I mean, the stupidity of the whole thing. I mean, I don't know about you, but it's just got me just shaking my head here.
Well, yeah, we are in the stage of the process where there aren't any good options. And so everybody is making a mistake in one way or another. And it's just, whose turn is it to make the big mistake? And Europe is looking at us, and they're actually not thinking that QE was a failure. They're thinking that it did serve to push down the value of the dollar versus the euro, which is good for us in the short run in terms of being able to trade out into the world, because it makes US dollar denominated products cheaper. If we're pricing cars or whatever in dollars and the dollar goes down, then we're able to sell our cars for less on the global markets. And the opposite is true for Europe. They've had relatively tight monetary policy for the last few years, and the euro has gone up and up and up. And it's at the point now where it's on the verge of causing the Eurozone to have another financial nervous breakdown. It's pushing the weaker Eurozone countries into deflation, which for them is a depression. Spain and Italy and Portugal and Greece are already in varying stages of a capital D depression. And they can't function with a strong currency because that makes it even harder for them to export and make any money from the rest of the world. So Europe is going to have to adopt US-style quantitative easing. They might call it something different, but they have no choice in their own mind to, they can't avoid having to do some kind of an easy money experiment in the next few years. And so what they're looking at now is pumping up the asset-backed securities market in Europe, which is a process by which banks make loans to consumers and businesses. Then they take those loans and package them into bonds, and they sell those bonds to institutional investors, which gives the banks cash to make new loans and presumably pumps up the consumer side of the economy and gets it moving again, which of course, anybody with a 7-year memory knows that's what happened to the US heading into the housing bubble and the subsequent crash. We had a booming asset-backed securities market, and that is what led to so much unwise lending, which in turn led to a horrendous crash. So Europe is going to adopt that policy now. They're going to go and try something that in the US worked for about 3 years and then led to the biggest financial crisis since the Great Depression. And which gets back to our original conversation about how there are no good options left. There's only new variations of old mistakes left for any of these guys to do, because once you borrow too much money, your life becomes unmanageable. And that's really the situation of the entire developed world plus a lot of the developing world. China's in a spot where they have so much debt that they have to either let a lot of it go into default or reflate aggressively, which will cause the same set of problems that we're living under. Japan is a huge mess. Europe is a huge mess. The US is, everybody's a mess now. And so we're just going to go back and forth and make the same mistakes over and over again on a bigger and bigger scale until the system breaks down. And so it's really a question of timing. When's it going to happen? That's the only big remaining question. When does everything fall apart? Because there are no solutions, and it's just a question of when the global financial markets figure out that there are no solutions, that everything we do is going to be a mistake in one way or another, and then they just give up on the concept of fiat currency. So that's really what is coming out there. And, frankly, I wish we could just get it over with. I'd love to see the monetary reset happen this year instead of 3 years from now, so we can go on to more optimistic kinds of conversations.
And there's just going to be so much more damage in 3 years than now. It's better to get it done with now rather than wait, isn't it?
Well, yeah, as the old saying goes, when you're in a hole, the first thing you should do is stop digging. And what we're doing now is basically digging ourselves more and more deeply into the over-indebtedness hole that we've put ourselves in. So yeah, we should stop, get it over with, and basically reset the global monetary system to be once again backed by gold and once again restrained by the increase in the global gold supply, which is about 2% a year. So if everybody had to link their currencies to gold once again, of course it would have to be at $10,000 an ounce or so to account for all the paper that's been created. But we would instantly go back to a sound money world in which governments are restrained because their ability to create new money is restrained, and everybody would have to start prioritizing again instead of like in the U.S. where we have a global military empire that costs $1 trillion a year, cradle to grave entitlement state that costs another $1 trillion a year, and a consumer society where the government encourages us to buy anything we want to with borrowed money. We couldn't have all of that in a sound money regime. So when the reset comes, we as a society will have to start prioritizing. We'll have to decide what's important. And I hope that we'll figure out that we don't need a global military empire and that we're better off without 100 military bases in 100 different countries and huge amounts of soldiers defending Germany from Russia and defending China or defending Japan from North Korea and China and protecting the Middle East flow of oil. All of that is a symptom of a society that has lost its sense of proportions. We're 5% of the world's population, yet we're basically defending everybody from everybody else, and that's completely unsustainable. So the first thing we should do is close down the global military empire. Then we need to address entitlements, and after that, the consumer society, and we'd end up with a lot more rational system. And hopefully we can get through that process without a capital D depression, but it doesn't look likely at this point. The numbers are just so huge. And even a reset where we just say, okay, from now on, the dollar is backed by gold at $10,000 an ounce. That wipes out the savings of a whole generation. People who have bank accounts and government bonds that pay them a fixed number of dollars every year. All of these things become far less valuable in real terms when the dollar has been devalued by 500% versus gold. So when that happens, the people who are dependent on fiat currencies are going to be the ones who are hurt. And so because we can't change the policy momentum of the global financial system, we're going to make these mistakes until we figure out that we can't do it anymore and have to stop. But that's kind of baked in the cake. But what's left is individuals having to figure out how to manage their own finances for themselves in light of what's coming. And that means shifting away from dollars and into hard assets. You want to own gold and silver and farmland and well-chosen other kinds of real estate and bank accounts in foreign currencies that aren't going to be hurt as badly as the US dollar. And in that way, protect yourself from what's coming. And that's really all that's left. There's no public policy fix here. There's only individuals trying to manage their own finances to protect their families.
Well, that's kind of what the money bubble is all about. And, what you're describing, it reminds me of, I'm at my in-laws, and they've got this old dog, Remy. He's 14 years old, and he's definitely seen better days. The poor thing, he's just fallen apart at the seams. But, they're emotionally attached to Remy, and they just can't accept that Remy needs to be put down. I mean, Remy is just suffering. He has seizures. I think he's got dementia myself, but they don't want to accept it. And they just can't bring themselves to bring Remy to the vet and have him euthanized. And that's where the system's at now. The system is on its last legs. It can barely support itself now, can barely stay up on its hind legs, and the system needs to be euthanized, John. It needs to be put down, and we need to go on to the next system. And nobody can bring themselves to do it. And until somebody comes along who can say, all right, it's over, let's go on, we're going to be going through these tremors, these seizures, until finally one of these seizures is going to be fatal, and God only knows where we're going to wind up, John.
Yeah. Well, the problem with changing the global financial system is that, first of all, so many people benefit from it, of course. The big banks and the politicians love having a printing press that gives them the ultimate power, really, which is to create new money out of thin air. Nobody would give that up voluntarily. So the marketplace is going to have to take it away at some point. And that could be a catastrophically chaotic process, or it could be something that becomes so obvious when everybody just starts shifting out of fiat currencies and into hard assets that the politicians have no choice but to follow along, and then it becomes relatively pain-free. Not pain-free, but relatively pain-free compared to a Weimar Germany hyperinflation followed by a Great Depression kind of deflationary crash. That's one big scenario out there, and it's probably the most likely one, but it's not the only one. It's possible that people just figure it out as the market sends more and more emphatic signals to the politicians, and that 3 years from now or whatever, it becomes politically palatable to do something like this. But right now, it's out of the question. These guys still think that their tools might work. Not because of any evidence that the tools work, but because they are deluding themselves into thinking that doing the same thing for the fifth time might have a different outcome. And that's because they don't want to let go of this sweet deal that they've cut for themselves. To be a politician right now is really a great gig, because you don't have to prioritize your constituencies. You don't have to say no to people. You can say, sure, we'll increase entitlement spending on this, and of course we'll protect the military budget, and of course we'll keep interest rates low so consumers can borrow, and of course we'll cut the rate on student loans so our students can go to college more cheaply. You can do all of those things with a printing press, even though each one adds to a deficit that's already unrealistically large. You take away the printing press, and all of a sudden you've got a finite amount of money, and a politician's job gets much, much harder, because they've got to go back to each constituency and say, look, the money's just not here. I'm sorry. I know you contributed to my campaign based on the assumption that I was going to take care of you, but I can't take care of you, at least not completely, because there's only this much money. And that's a hard life for a politician, having to say no at every fundraising dinner and every private telephone conversation with your big contributors. Those are things that no politician wants to do, and the current generation of politicians isn't equipped for it. They've never had to do it, so it's not part of their skill set. So they're avoiding it.
What fundraising dinner? When you start saying no, there are no fundraising dinners. In fact, your career is done. We'll talk more about this up next on the Financial Survival Network.
FSN Radio.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's irsrevenge2.com.
The Financial Survival Network. It's all about what's next.
And we are back. We're speaking with John Rubino. It's Monday, April 14th. So, John, if you can't print money, what's the fun of being a central banker? You can't be a central planner if your job is only to exchange warehouse receipts for precious metals and to keep literally just do bookkeeping entries, which is all the role of what a central banker was supposed to be when the Federal Reserve started 101 years ago. Actually, 101 and a half years ago. What fun is that? You don't get to play God anymore. You might as well just go get some bean counter out of an accounting firm, out of the big 4 or 6, however many there are now. Big 4, I think it is. I mean, what more boring career could you think of? You don't need a Janet Yellen. You just need a bean counter in chief. from the General Accountability Office, you will really just can get rid of the whole Federal Reserve, and who needs them anymore?
No, that's exactly right. The original idea of a central banker was basically a glorified accountant. You kept track of requests for exchanges of gold and currency, and you fulfilled them, and that was it. and and then if a bank got into trouble, you gave them a little extra money to tide them over, which was a pretty simple operation at that time because it was just physical currency. You would just ship them $10 million, and then they would pay you back when they got back on their feet. So central bankers have evolved over time because they had this basically unlimited power of a printing press that they could do anything with post 1971. And so now they're these national celebrities. They're the most powerful men or women in the world. And they love that, of course. And when that is taken away from them, it's not going to be voluntarily. Again, they're not going to give that up. They are going to hold on to that for dear life because, again, it's a very sweet gig. Being able to create money out of thin air is just the nicest thing in the world to be able to do. And again, the market will take it away from them eventually, but they're not going to do it voluntarily. And that's a big part of the reason that the system has so much institutional momentum. And no matter who gets elected, it turns out we have the same policies. And the reason for that is because nobody wants to give up that kind of power. So that's why the amount of currency in the world versus the amount of gold and silver in the world continues to rise. If you graph the increase in the global money supply versus the increase in the gold supply, it starts out with basically a one-to-one relationship in the late 1970s, early 1980s, and then the gap gets wider and wider and wider until the amount of paper in the world versus the amount of gold in the world is just gigantic. There is such a huge discrepancy there. And to bring the two back into balance, you need to raise the fiat currency price of gold to something like $10,000 an ounce. And so basically the financial story of the next 10 years is how do we get there? And we have to get there. We have to equate these two numbers at some point. And do we do it chaotically, or do we do it systematically and voluntarily? And do we do it over a long period of time, or do we do it soon? And by far the least painful way is to wake up and do it voluntarily next year. But that's almost certainly not going to happen. So it's probably going to be painful and chaotic and protracted, but we'll end up there somehow. And in the meantime, a lot of people are going to lose a fortune. A lot of other people are going to make a fortune. And it just depends on where they've positioned themselves, whether it's in hard assets or fiat currencies. And so the fiat currency bloodbath is going to be epic. And, hopefully you and I will be able to spend the next few years talking about this because it's going to be a great story. From the point of view of financial history and theory, it's going to be absolutely fascinating. The world has never seen anything like this. And hopefully we'll never see anything like this again. Hopefully we'll learn our lesson and we'll spend the next 100 years with wise, chastened policies that look at what happened in this decade and promise never to let it happen again. Yeah, but
till the next time.
Well, we're a cyclical species, and the grandkids don't remember what their grandparents went through. So they look back at their grandparents and think, man, these guys were so conservative. They were so timid, and
old fuddy-duddies.
Yeah. And so they make the mistakes of their great-grandparents again. So we will always live through these periods of financial cyclicality, but we're heading into the equivalent of the 1930s, which chastened a whole generation. The Depression era people were financially conservative for their entire lives. Even if they were millionaires later in life, they still lived like people who were worried about where their next meal was coming from because they knew it could all be taken away. And their grandkids don't know that. The baby boomers just flat out have never seen a crisis that threatened their entire financial lives, that threatened to turn them from, upper middle class to homeless. So they're going to see that, and it's going to completely change their attitude. So the baby boomers' kids are the ones who are going to suffer through this, because baby boomers have basically, we've lived most of our lives, and we've got Social Security and Medicare locked in for the next few years at least, and our houses are worth a lot of money. So we still don't see it. We still think that, there are going to be some ups and downs, but we're going to eat, and we're going to have a roof over our heads. Well, our kids aren't necessarily going to think that, because the chaos of the next decade is going to threaten, basic subsistence, basic livelihood for a lot of these people. And so we're going to create a generation of extremely conservative people who know that it can all be taken away from them, and who are going to insist on public policy that won't let that happen. So it's the 1950s again. And that's just the nature of humanity. We are a forgetful, short-lived species who is, basically going to have these cycles forever. And we're just heading into one very predictable part of the cycle, which is the nasty part.
Yeah, you make such a great point that they'll be like our parents and our grandparents. I mean, our parents were savers, right? Our parents actually saved up money and put it in the bank.
I actually have a great story along those lines, Kerry. When I was 17, we went in to take out a student loan for me when it was time to go to college. Mm-hmm. I remember the banker pushing the application back across the table to my mother and saying, Mrs. Rubino, you forgot to fill out this part. And it was the credit history part. And my mom said, well, I don't have anything to put there. They had never borrowed a penny in their lives. My folks didn't have a credit card, a mortgage, a car loan, nothing like that. And so she couldn't fill out a credit history form, And so that is so alien to today's baby
Look at
boomers,
us now.
Right? Yeah.
Haven't we
have
really
credit
progressed? We've really progressed, haven't we?
Yeah. And so we think credit is a way of life, and that you aren't living the correct kind of life if you don't have at least a big mortgage and probably a couple of credit card balances, and then your kids have student loans, and you've got a couple of car loans, and that's normal. And so the generation that follows us is going to realize that it's not normal, and it's not a good way to live, and debt-free.
You need to have leverage.
The way to live.
You must have leverage. You're not normal if you don't have leverage.
Mm-hmm. I
mean, what's wrong with you?
Back in 2006, you had these shills for the housing industry, these so-called economists who were telling people that they weren't putting their home equity to work if they weren't extracting it and using it to buy cars and vacations and things. And that you should go to jail for that kind of thing, I think, for telling people that. And we've still got a lot of guys out there saying basically the same thing, that you need to use debt in order to live a fully actualized life, and that's just crazy, and it'll be revealed as crazy in the not too distant future.
Yes, it will. And on that note, we're going to go, but you find John's extensive work at $collapse.com. And of course, there's always a link in the show notes to this interview, right to John's site. Don't forget, go to financialsurvivalnetwork.com, sign up for the newsletter. Got a good one coming out on the Cliven Bundy situation with the Bureau of Land Management. Don't want to miss that. John, we'll talk to you next week. Be well and stay under-leveraged.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.